LinkedIn, YouTube, Facebook, Instagram, TikTok. We've got Jess Lamar in the house today. We'll be talking about ranches in East Texas. Come on in, Jess. Just kidding. Today we're talking about multifamily real estate. Title of this live is the reason why multifamily real estate is not crashing. Well, there's a few reasons for that. Can we lower this camera just a little bit? Let's make sure that. How's our audio here? Can you hear me okay? Audio is good. All right. Welcome, everybody. In just a moment, we're going to get started talking about some multifamily real estate. Hello, Chase. Where's everybody viewing from today? Austin, Texas, Pittsburgh, Texas, home of the Peaches, and the Hot Links. Are there any apartments in Pittsburgh? Zero?
It's just HUD housing.
HUD housing. Biggest is like a fourplex, maybe.
There's large ones, but they're like this all low income.
All right, where's everybody viewing from today? John, where are you located at? We live on TikTok
TikTok, Instagram, the way.
and Instagram. TikTok, where are you viewing from? All right, so today we're going to be talking about multifamily real estate. So we talk about this often, but let's talk. Let's just dive into some information today. I was listening to CBRE's quarterly report from last quarter. I don't know if they've come out with their quarterly report for this one yet. I think it comes out at the end of the month. But CBRE was talking about how industrial and multifamily is the highest performing sectors that they have right now. Property management is doing good. They were saying how office, of course, is not doing so hot just due to the fact that people are not working in offices anymore. And then I saw something today. I think it was Blackstone raised $30 billion for a real estate fund. Let's see if we can pull this up. They raised $30 billion for a giant real estate fund. Let's see what this real estate fund is comprised of. Global Real Estate Fund, $30 billion. So people are still investing in real estate. Real estate is not crashing, as some of you might know. It depends on where you're located at, depends on what market you're in, and also depends on what type of real estate you're buying. If you're buying offices or if you're holding on to offices, they may not be doing so hot. But one reason why specifically multifamily real estate is going to continue to do well is because of the need for people to have affordable rent. In places such as Austin or the suburbs of Austin, to be able to get $1,800, $2,000 a month rent for apartments with very high quality amenities, gyms, pools, valet trash, all the stuff that people pay for in apartments is likely not going to go away. And $2,000 a month in Austin is not that expensive, and it's actually affordable comparatively to having to buy a house in Austin and your mortgage be $3,700 a month. It makes a lot more sense to just rent out the apartment for $2,000, wouldn't you say? So there's also a shortage of housing in Austin, and so people need a place to live. And depends on where you're located at or where you're looking to invest, but right now apartments are doing well and will continue to do well. Now is not the best time to sell an apartment, and now may not be the best time to buy an apartment complex if you can't get a good enough deal, and especially structure the right debt to get on it. But As we're just going to cover some fundamentals today. As interest rates have risen, the cost of debt rose. Therefore, if you're going and buying an apartment complex today, you're no longer going to be able to get 3 3/4, 4 1/4 interest rate on the asset. Therefore, you're not going to be able to pay the prices that you would have been able to about a year and a half ago, because you'd end up just losing cash flow every single month. And so, as interest rates have increased, so have the ability for someone to pay cap rate. So as interest rates increase, the buyer's capability to pay lower cap rates has decreased, and they have to pay higher cap rates. A cap rate, for those who don't know, is just a return. Very simply put, it's the return that you would get if you bought the property cash. It is the net operating income divided by the purchase price or sales price. So if you bought the property cash for $100,000 and you received $5,000 in net operating income every year, that would be a 5% return or a 5% cap rate. So as interest rates have risen, so have cap rates, and people are unable to pay the prices that they once were able to. And I'll show you how, for those who are not too familiar with how the cap rate really affects the price that you can pay. Let's say you have a 50-unit apartment complex, and they want to, let's say it brings in, how much does it bring in, Jess? Annually, net operating income.
At $2,000 a unit a month?
Yeah. Divided by, because you don't get to keep all that, you got expenses.
Yeah, probably 500,000.
All right, let's say it brings in, it's a lot, 500,000. 500,000 in NOI. And let's say 2 years ago, someone wanted to sell this for a 4 cap. Now, do you remember the equation? NOI divided by sales price equals cap rate. So if your NOI is 500,000 and 2 years ago they wanted to sell it for a 4 cap, what's 500,000 divided by 0.04? You got to have your calculator for commercial real estate. Kat usually gets to answer all these questions. 12,500,000. So this is the price that they would want to sell it for. All right. Now, let's say today that this property has to sell for a, still brings in the same NOI, 500,000. Still got the same demand for tenants, but the only issue is that the cost of debt has increased. So let's say today it has to sell for a 6.5 cap. So what's 500,000 divided by 0.065? 7.6 million. See how much the value of that decreased just because of the interest rates and the cost of debt? If this was an actual example, this is why it's a horrible time to sell your properties right now, because you're not going to be able to get what you could get for it 18 months ago. So it's a bad time to sell. And a lot of these sellers who are in situations where they have to sell, they're wanting to sell at these prices still, but no one's going to buy it because they're going to lose millions of dollars every single year. But it's a good time for you to come in and buy good properties if you can get good debt and structure good deals. We're calling hot markets all over the United States right now. going for some smaller commercial multifamily and speaking direct to sellers and seeing if we can turn something up. And a lot of these sellers have adjustable rate loans, and the cost of their debt has increased substantially because of these adjustable rates. And now they're not making as much money as they once were on the properties, and some of them could be forced to sell. So it's a great time to buy. It's a bad time to sell, and you really just want to structure good deals. I mean, what questions do the people have about investing in multifamily real estate? Jess, you ever thought about buying apartment complexes?
No.
Never? You wouldn't?
What types of loans are you
What type of loan?
Can you get?
So you're likely going to get, I mean, you can get all different types of loans. You can go raise money from friends and family. You can find somebody to give you a private money loan. You can go get commercial loans. You can go get potentially get Fannie and Freddie loans. But you're likely going to have to put down about 30% of the purchase price as a down payment. So you either need to have this 30% plus closing costs and any additional capital needed to start managing this deal, or you're going to need to go raise that capital from other investors. Right now, we've got a deal under contract in Llano, Texas. We already own 17. We already own 21 units there. We have 17 apartment units, and then we have 2 duplexes in Llano. And I think I don't know if there's any other, we might own about 75% of the apartments in Llano. There's not that much inventory there. And so we found 50 units. It's not an apartment complex. It would need to be converted into an apartment complex. And this could potentially be a good deal for the Llano market. They don't, these 21 units that we own there, there's a constant need for people to find places to live in Llano. There's not any apartment units available typically. And it's cheaper rent. We rent them out for about $850, $900 a month, 2-bedroom or 1-bedroom apartments. So it's not very expensive, and there's a need for apartments there. And a lot of times when we list these for rent, they get leased out within 2 days or so. People are always jumping on the opportunity to rent out these apartments. The 17 units, let's just run through that. Let's run through an actual example that we got. So the 17 units in Llano, we bought at the end of 2021. We bought it in November or early December 2021. I think we paid $1,125,000 or so. So what price is that per door? Kat? She can't use a calculator. So price per door. So 1125000 divided by 17. So we bought it for $66,000 a door. And when we bought these, they were rented out for about $575 per door, give or take. And since then, we've increased the rents as either leases come up for renewal or as tenants move out, and we do make-readies on them, get new tenants in there. We've increased the rents to about $850 to $900 per door. Now, that's about a 35% increase in rents. Let's see here. $275. Well, 47%. So from the $575 that we're paying to $850 per door for the rental increases, there's about a 47% increase in what they were paying. But most of the tenants who are renewing and who've lived there for a while have no issues paying the new rent. Of course, they'd rather pay this, but it's a still very affordable, even in Llano. And there's extremely high demand. If they decided to leave, a new tenant would take their spot very fast. And so let's run through what it was doing. 575 times 17. It's not occupied, or it wasn't when we bought it 100% of the time. So it was bringing in about, can y'all see all the way down here? It was bringing in about $105,570 annually at like 90% occupancy when we bought it with these 575 rents. The operating expenses are not that much. Property taxes are not very high. And management isn't that much. And we bill back utilities to the tenants. And they also pay for their own pest control. So it operates at about 35% operating expenses. Therefore, out of that 105,000, our NOI is about 65%. 570 times 0.65. That means our NOI, we were keeping about 60, give or take $68,000 a year after repairs and everything. Now, after our debt costs us $4,200 a month. 4,200 times 12 puts us at 50,000 in annual debt service. And therefore, we're keeping about $7,600. Sorry, $17,600 in cash flow. Now, based on we put about 25% down on it, so 1125 times 0.25, 281, 17 divided by 281. So it wasn't great when we bought it. It was about a 6% cash on cash return. But here's the cool thing after we raised those rents. So now we got them at $850. So $850 per door. The occupancy has increased a lot. I mean, there's a month or two where one of the other units is vacant, but they rent out very fast. So now that we got the rents raised, 850 times 17 times 12 times 0.95. Now our gross annual income is at $165,000 a year. Our operating expenses are still about the same. They haven't increased that much. And so our NOI is now basically what our total gross income was when we bought it, about $107,000. We still have to pay our $50,400 in debt. And now our cash flow is about $55,000 a year. So it increased from $17,000 to $55,000. And all we did was raise the rents $275. And here's the deal about this apartment complex and Llano in general is these units are always going to be in high demand. People are always going to need a place to live here. If we end up buying these 50 units and converting them into apartments, that'll potentially cause some shock to the Llano apartment market now that there's 50 more units available. Hopefully the demand's there. We're not sure. We're going to be walking through that process with the city to kind of see what we should do, if they'll give us any incentives to complete this conversion, because that conversion isn't going to be cheap. But if Llano market will support 50 more units of apartment inventory, and we get this at the price that we like it at, and if we're able to convert these units, with very minimal cost to get kitchens in there, most specifically, closets, kitchens, that type of thing. It's going to be great for the it's going to be great for whoever ends up buying it, whether it's us, whether it's you guys, if you buy it with us. These Llano apartment units are doing really good. And this is just one city, one small city in Texas. Now, there's going to be a lot of different cities like this all throughout Texas. Austin's a great place. Dallas is a great place. Houston's a great place. And there's a lot of these cities that always will need good apartment units available for rent. And that is the main reason why, going with the title of this live, that multifamily is not going to crash, is people need a place to live, and they need an affordable place to live. You know, if these rents in Llano were $3,000 a month and they were on the Llano River or something, and they're extremely high end or something like that, it might suffer. It might not get as many people renting it out. It might not get as many people traveling to the Llano River like they were when times were good. But even in a recession, even when things are going down, even when people are losing their jobs, they need a place to live, and they need a somewhat affordable place to live. Now, affordable is relative. Affordable in Austin is different than affordable in Pittsburgh, Texas. And so it depends on what types of jobs there are there. It depends on the market, depends on what people's median income is. But for Austin, 1,800, 1,700, 1,600, 2,000 is not unreasonable. And it's actually way cheaper than going and buying a house. I just signed another lease extension for the house that I live in. We lived there for 2 years, and we pay $2,300 a month for a really nice house. If I were to go and buy this house today with today's interest rates and property taxes the way that they are, we'd probably be paying like $3,700 plus a month for our mortgage. And we pay substantially less, and we don't pay the taxes, and we don't handle the maintenance. We don't deal with any of that. The landlord does. So you just need to look for good deals, try and talk to these sellers. I don't think they're there yet. Everybody's still pretty unreasonable right now with the prices that they want. But when these sellers are trying to sell you these apartment complexes at 4% cap rates, they're just not going to be able to sell it in general. And so they won't sell. It'll just sit there until they're willing and able to come down to today's cap rates and sell them at the price that they have to today. What questions do we have? Who here lives in an apartment? Who here loves living in an apartment? I do. I like living in an apartment. You get the pool, you get the gym, you get you should be getting, if you're paying, good rent at a good apartment complex, you should be living in an updated unit. I like living in apartments. Who else here rents? What are you gonna? I mean, if you're renting an apartment right now for $1,600 and you just lost your job because of the recession, are you gonna go buy a house that costs $500,000 in Austin and have a mortgage that costs you $4,000 a month? No, of course you're not. You're gonna stay at your apartment as long as you can.
There's this whole seller that has a industrial under contract in Llano for $670.
What is it?
It's an abandoned office building. He said the seller didn't request any earnest money.
Cool. Send it. Let's check it out. Alex@trehomes.com. Alex@trehomes.com. Send over all your deals. If you want some more information on potentially investing in the Llano 50 units, reach out to us. Send us a DM on any of these platforms, or send it to my email, alex@trehomes.com. Any other questions, Kat? What questions do you have? What do the people want to know?
Well, for that deal, is that seller financing?
The Llano?
Mm-hmm.
It can be. We've negotiated the ability for it to be financed by the seller. Why, you ask?
Okay.
It'll be about the same as of now, whether we go to a bank or just do it through the seller. Seller wants a good hefty down payment. But we have the ability to get it financed from the seller. Right now, it's a motel. It's right by Cooper's Barbecue, very famous barbecue place in Llano. Everybody there loves Cooper's. So it's a good location. I think it'd do better if we could potentially get it to be apartment complex if the Llano market will support the addition of 50 apartment units coming in. And if they have the people there that need to rent out these apartments, I think it would do better potentially than a motel, but we're still running the numbers and figuring out the best strategy.
What will it cost to
Not sure yet.
convert it?
That's kind of what we're working through. We're going to meet with the city and see if they'd be willing to help us out at all. But if you want the opportunity, to invest in that or any of the other deals, we got 8 units in New Braunfels that we're looking at. We've got 20, I think it's 25 units in San Antonio that we're looking at. If you want the opportunity to invest in any of these deals, just send us a DM or send me a email, alex@thierryhomes.com. No other questions though? We got to get you guys investing in multifamily. Sell the house, buy an apartment complex, live in one of the units, and rent out the other 19. And get all that cash flow and quit your job.
What does that include, like property management?
Yeah. So remember, this is our gross income. Let's run through it. So income. This is our net operating income. So NOI. This is after your expenses. So your expenses include things such as property taxes, insurance, maintenance and repairs, property management, utilities, grounds, attorneys, leasing commissions, all operating expenses that are required to operate the apartment complex. They do not include your debt. So your debt is not included in your operating expenses. It is subtracted from your NOI, which then gives you your full cash flow number. Apartments aren't going down. If you have any deals, please send them our way. Yeah, I know, Chris Sweeney, $30 billion. Global real estate fund. Touched on that at the start of this. Do you know what that $30 billion is going to be invested in? I bet it's not going to get, could be wrong, but I bet it's not going to get invested in office space, right? The vid, the diseases, no one's gone back to office space yet, but industrial, multifamily, potentially development, I bet you is where BlackRock is going to spend the $30 billion. Mobile home parks, storage units, all of these are great cash flowing real estate assets. They probably are going to buy some single family homes too, I bet, and rent those out. Because right now, you can get a pretty good price on some single family homes versus what it looked like last year, 18 months ago. All right. If you don't know how many people we got on TikTok, 5,000. All right. So everybody on TikTok and Instagram, YouTube, Facebook, LinkedIn, how many days we have? We've got 12 days left. 12 days until the Entrepreneur Real Estate Workshop. Make sure you grab your ticket. Kat, can we post these in the comments where you can get your tickets, please? Just right there on Facebook, LinkedIn, and stuff. They're going fast. We're running really big discounts on them right now. This is going to be an all-day in-person event. Matt and I are putting on. We have some guest speakers coming. We've got John Michael Perez. We've got Doreen Sidney. And Matt and I are going to run you through how to buy deals, how the multiple exit strategies of seller finance, sub-2, flipping, wholesaling, buy and holds, where to get the financing, how to find the partners. And all that is great. But the most important thing that you need to get from attending this workshop is networking and meeting all the people there. You're going to easily walk away with $1 million worth of value for $100 if you would just connect with every single person there and see how you can work together. You and one person you meet there could leave and go do $1 million deal that next week. We want to do $1 million deals with you. Send your deals this way, grab your ticket. We'll see you at the workshop, and we'll see you next Monday.